Edward Brown, host of The Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Chris Papin. You're not going to want to miss this show. That's The Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Let's see. We do have a special guest, Patrick Grimes of PassiveInvestingMastery.com. I always like to add the .com on there. Let's see here. Okay, the title of our show, AI Solutions, the key to time-saving and budget-friendly business operations. Patrick is the founder of Passive Investing Mastery, Amazon best-selling author and Forbes Council contributor. A former robotics engineer turned alternative investment expert, Patrick helps investors build recession-resilient portfolios across litigation finance, energy, and commercial real estate. Hey, Patrick, welcome to The Best of Investing.
Glad to be here. I'm excited to be, especially in the San Francisco area. It has a soft part in my heart after spending some time there myself.
Yeah. Oh, okay, great. Where are you located now?
In Honolulu.
Love that. In fact, I'm going to be there at the end of this month. Not in Honolulu, but on the west side. Yeah, we love that. So, did you move there?
Yeah, during COVID, we were in Southern California then, and my wife came out one day and said, "Hey, let's just build Hawaii." And so 2.5 weeks later, I had us on a plane.
That's great. No, we absolutely love Hawaii. I don't know if I'd want to live there, but I haven't done that yet. But we spent a lot of time there, so I'll definitely have to check that out. All right, so let's talk about high tech to investing transition. What inspired you to transition from a high tech career to investing in real estate and alternative assets?
Well, it's interesting because probably like many of your listeners out there in the Bay Area, I was in the high-tech space. I did automation and robotics, and for mostly custom machine design manufacturing projects. I did some stuff with Google, stuff with Apple. I did some stuff with Lockheed and Tesla. I worked in that Fremont facility when it was Toyota, and then I went back in there when it was Tesla. So a lot of history in the area. And the first machine design firm that I worked for, I was a snot-nosed engineer out of college. I had won a design competition. I got myself a job. I was 3D modeling in SolidWorks and creating, they're chipping pieces out of metal and we're building this stuff and I'm just loving it. Doing well, I'm getting some bonuses. I asked him, "Hey, look, where should I invest?" And silly me, I thought he was going to say, "Oh, you should invest in, Intuitive Surgical or Facebook or, all these things." And he said, "No, if you're making all your money in high tech, go invest it elsewhere. And that's really what you need to do to get the financial security." And he led me towards alternatives, things outside the ebbs and flows of the high tech and the stock market, which was real estate. Now, I didn't do well on my first investment in real estate. I crashed pretty hard, but it was humbling. But
Okay.
That's what got me on the path.
Wow. Would you mind talking about without getting necessarily specifics, but what happened when you crashed? What was the situation? Did you buy real estate, or did you buy a loan, or fund a loan? What did you do?
Yeah, back in 2006, when I was kind of like in that position where I'm like, "Hey, look, let's go make it big." I started researching the different types of ways to invest for big returns, because I was invincible, right? I was great at engineering. Of course, I'm going to be a brilliant real estate investor. And I found some ways that were sure to double and triple my money every other year. And that was a pre-development, and what turns out to be risky and turns out to not be cash flowing, and turns out to not survive a subprime mortgage collapse. And so in 2009 and 10, it took me down hard. I didn't go through bankruptcy. I was able to carry it forward long enough to reach an agreement with the bank to do debt forgiveness. But you know what that meant? That meant I had to pay taxes on the forgiven debt in the following year. My credit was wrecked and I was humbled. You know what? I got a master's in engineering and business after that. And, I was back off to the races, back on my feet. But man, that was getting humbled early.
Gotcha. Yeah, I've been there, done that. So sometimes those are the best lessons, though. They're expensive, but sometimes they're not so expensive when you realize how much knowledge you gain from it. All right, we're going to go to our first trivia question here. And just as a reminder to Patrick, if you know the answer, don't say anything quite yet. We'll let you answer when we come right back from break. First trivia question: how much of the Earth's surface is covered with ice? Email Edward, or actually call 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. The Best of Investing will be right back. Don't touch that dial. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my special guest, Patrick Grimes of Passive Investing Mastery. I like that. All right, first trivia question. How much of the Earth's surface is covered with ice? What do you think, Patrick? Take a guess.
You know, they didn't teach you that in engineering school or in real estate business. So I'm going to say 4%.
Oh, actually, it's 10%.
10. Okay. Well, a lot more than that.
You're not that far off, though. And what is like the Earth water is like 70% or something. So that's actually a pretty good guess. We'll give you some good credit for that one. Okay. Now, how did your background in engineering influence your approach to investing and entrepreneurship?
Well, you know, most engineers I know, they're doing some really high tech, really cool stuff. And I work with some of the smartest people. I figure a lot of them are right there in the Bay Area. And just none of us knew anything about investing other than the 50 stocks or the startups or, you know, maybe crypto. And back then there was still, we were buying crypto way back then. Wasn't as crazy it is today or as popular, but nobody's out there saying, hey, here's the 50 different alternatives and that are non-correlated and build real wealth and have tax advantages and help to get you free of your job. And me as an engineer, I was geeking out about it and loved it. Never thought I'd ever get away from it. But I knew just from having lost it all and seeing the ebbs and flows and getting some advice early that I needed to diversify. But like most engineers, it's an uphill battle. I've seen a lot of successful individuals that came from the high tech space, came from engineering investing, but I've seen many more of them who just had analysis paralysis, never really made the leap, and have a hard time getting into new things and just actually pulling the trigger. And so I'd say for as many people that it's helped excel, it's probably a hindrance probably to many more.
Gotcha. And I understand that analysis by paralysis because sometimes you'll miss a good deal because of it. Other times, if you go too fast, sometimes that really will help, and other times it's a hindrance. So talk about your thought leadership and writing. What led you to write your international bestsellers? And you'll have to tell us the names of those and how they and how that has helped your thought leadership build a loyal customer base and attract investors.
Well, what's kind of funny is that I really didn't talk about my real estate investments far back as, you know, the collapse in 2009 and 10. I didn't talk about them when I was building single family. I was investing in single family when I got back into it in Houston, where it was very recession resilient and cash flowing. I didn't talk about it when I started buying in apartment buildings and partnering in apartment buildings. And even when I did some energy, I was keeping it very close to the chest. I was still an engineer at the time, and I was worried about what that might mean. I also changed as a contractor, and I was even more worried after that the company I was contracting with would find out what I was doing. And I kept it really close to the chest. So I kind of had a lot to say by the time that I finally participated. It was guy Kyle Wilson who I met at a conference, and he said, "Look, got to get your story out there, man. You gotta come out and talk about what you're doing." And I think at that point I had a partnership in like, you know, over 400 apartment units already. And the guy was like, "Hey, people are going to be inspired." And so I participated and contributed to a book called Persistence, Pivots, and Game Changers, which he felt I was a good fit for because I had pivoted and I had persisted through downturns, and I had changed up my game a couple times and scaled. And it was a liberating experience, finally talking about my failures, talking about my successes, my lessons learned, and getting it all out there.
Wow. And so what are you actually doing now? Because you said you have clients, or what's going on with you now?
Yeah, so we have a diversified portfolio and lesser known alternative investments that are recession resilient. And our company both educates investors, just working professionals like your listeners, on what are these alternatives out there. And that's what Passive Investing Mastery is. And we host an alternative investing mastery series. And
Oh,
that's my blue ocean approach, right? Where it just was me and a handful of dudes trading the baseball cards of these alternative strategies for a long time. And then I finally
yeah.
said, okay, here's my hand. People loved it. So I said, okay, here's the whole deck. And so we've had over 50 now hours worth of every couple weeks, we have a new set panelists of people who have been doing a completely different kind of alternative strategy. And we
Huh.
dig into the nitty gritty details, and it changes up every week or two. We do a completely different one. And we've done things from parking lots to gold mining to Forex to bourbon barrel cask investments. Our next one is on timberland and agriculture investing, to completely different alternatives, things that help to really build pillars of stability and healthcare and CPA firms and energy, but build pillars of non-correlation, making sure your portfolio doesn't rise and fall so you don't lose it all like I did, right,
Yeah.
in the past,
But,
and
but you're not
help to.
asking the investor to be an expert in timberland. I mean, they would invest in a company that handles that, like a company that drills for oil, right?
Yeah, so we bring on panelists and I host them, and I bring on, usually three different organizations or companies that have for about 10 years been executing in these specific strategies. And we do a mastery series, a deep dive, and really help to unveil, here's the blue ocean approach of here's not just the stock market portfolio, but here's the 50 kinds of alternatives you can immediately get into to start building more stability in your portfolio.
Very interesting. We'll talk more about that in a minute. Second trivia question. Which animals eat with their heads positioned upside down? That's our trivia question. Call 888-912-1190. The first caller with the correct answer wins that tanning certificate. I do want to make a mention also here. Check out the Tahoe Lakeshore Lodge. End of summer. Time to get to Tahoe before it gets wintertime and you have to start skiing again. So check them out during the summertime. They have hundreds of feet of beachfront property. So check them out. TahoeLakeshoreLodge.com. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. One more time. I'm Edward Brown, your host, along with my special guest, Patrick Grimes. Second trivia question. Which animals eat with their heads positioned upside down? What do you think?
Well, my dad's rolling over in his grave right now because he was a biologist and a PhD. He said, "You should know this." I'm going to go for the obvious wrong answer, a bat.
You know, it's funny. That's what I was thinking too. No, actually, flamingos. Because the way their necks are
Wow.
crooked, they have to kind of eat up, kind of crazy.
Wow.
Hope they know what
Yeah.
they're eating at the time. So now you also, so you're a best-selling author, but then also there's something about Forbes that I read in your Forbes Council contributor. Tell us about that.
Yeah. So along with like starting to contribute with books, I was asked by one of my colleagues it's like an invite only. The Forbes Council is an invite only kind of group, and they invited me, and they have to go through this process to like verify your status and your company, and then you get admitted, and then you can contribute towards Forbes articles. And I started doing that, and then I started writing some, and so I've written about a half dozen now, and all kinds of different things. And then I've been probably in 1,000 investor calls, way more than that, and it starts to get really repetitive. What you're talking about, because the same big discontinuities in knowledge are there. And so I started writing on topics where I could be in an investor call and say, like, I only really have 20 minutes here, but I'll tell you what, I'll give you the gist of it. But if you want to know about how to self-direct your IRA account or your 401k account into alts, or if you want to know about how to do a 1031 exchange, or if you want to know about asset protection, which is super critical, and tax savings, not just doing it in a way that's protected but efficient. And if you want to know about these things, check out this article, read through it. I'll give you the gist now. On our next call, let's dig into the details and questions you have. And so it really helped me be able to asynchronously communicate much more thoroughly with individuals and lay out everything. And We also do educational webinars in our mastery session. We deep dive into advanced tax strategies and asset protection, all these same things now, 1031 exchanges, all these DSTs, all these strategies of the kind of the ultra wealthy, what they do. And we try and kind of unveil it in very simple terms.
Very cool. Well, what is your favorite alternative investment?
Well, actually, right now it's legal funding. And because really, if you're looking for alternatives, they think of what is way outside of what the rest of your portfolio is, right? And most people are in the stock market. Maybe they've ventured into real estate. It's usually a rental. Hopefully, they're not in real estate and call that a REIT, and it's a REIT because that is not what we call non-correlated. It rides and falls directly with the market. But if you're looking for, hey, what's that next investment where I have my pie chart and I want to have a sliver and I want that to not rise and fall with the rest of my portfolio, my favorite, the lesser known sort of novel asset classes, the ones in education, healthcare, and legal, are the ones that really give you that Venn diagram of non-correlation, stability, and recession resilience. And that overlap, those three fit. And legal tends to be the one where we find the best return for the lowest risk.
How do you invest in legal unless you're buying settlements or something like that?
Yeah, like in any industry, there's a lot of ways. Like there's no one investment company that's the same in real estate or in oil and gas.
You're cutting in and out. You got a little. Okay.
Can you hear me?
Very, very, very interesting. Yeah. It's funny because your internet's kind of going in and out a little bit. How's the weather in Hawaii?
I'll take the blame because I'm on the island. I'm an island in the middle of the Pacific here for that. But and you are cutting out as well. So.
Yeah. Yeah, sometimes it was doing great before. So while that's kind of working its way out, because we're going to go to a break here in a minute, I'll tell the audience a little bit about what's going on with the Arrival Fund that's sponsored by Pacific Private Money. So they have this fund where they fund primarily bridge loans. Someone wants to buy a house, they already own a house, but they can't qualify for two houses. So they help them buy the next house before they have to sell their old one. A lot of people don't want to move twice. So if they can secure the first house, then they have time to fix up the old house to go ahead and sell it. And because it looks like an all cash offer, because they're using primarily most or all of the money from the Arrival Fund, they can usually get a little bit better price when they're competing against other buyers. And then these loans, it's kind of interesting because there might be a loan that's only maybe 60% loan to value. And the Arrival Fund already has built-in contracts with buyers, specifically one major one, but there's a couple of them where they already know if it fits within this box, they're going to buy the loan. So people ask, well, what's the default rate? And it's technically zero because the borrower hasn't even had a chance to make a payment because they've already sold the loan. So they just put on the conveyor belt, get the money back. They charge points, pay the clients 10%. It's kind of hard to find 10% in a pretty secure world, a secured 10% in today's world. So for more information, people can check them out at pacificprivatemoney.com and check out their Arrival Fund. All right, our third trivia question here is, what type of bird can do math as well as a monkey? That's our trivia question, a little different there. Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Again, what type of bird can do math as well as a monkey? And we have time for a quick little silly joke here. So I told my wife that she drew her eyebrows too high. She seemed surprised. All right, audience, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown along with Patrick Grimes. Third trivia question is, what type of bird can do math as well as a monkey?
Striking out here. I don't have the foggiest clue.
Pigeons. I guess they tested them and pigeons came up. They can do math as well as a monkey. I thought that was pretty good. Didn't realize monkeys could do math, but It's just me. So now, Patrick, first of all, how do people get a hold of you if they're interested in learning about all these mastery, classes, and you've got a wide variety of alternative investment education for people. How do they get a hold of you?
You're resonating with any of this and you're saying, hey, look, it's a bit of a precarious time and I have this portfolio, and it would sure be nice if I could carve out a piece of my portfolio into something that's a bit more recession resilient and doesn't rise and fall with the rest of it.
Yeah,
PassiveInvestingMastery.com. We have not only education side of our
passive.
business, we also offer alternatives.
Yeah. Okay, you're cutting in and out a little bit again, but just for the audience, it's passiveinvestingmastery.com. I want to make sure that we get that out for people. So we heard, a mini horror story of like when you just were brand new getting into investing. Do you have a couple of success stories for us?
Yeah, well, I mean, we just contributed towards the LA Juvenile County sexual assault case, which is a terrible situation of the mistreatment of our youth in the LA Juvenile County detention centers. And we helped an attorney who was out there finding harmed individuals and aggregating them together and working on a contingency fee basis to help provide representation to these and to provide access to justice for these individuals that otherwise wouldn't. And that would be how we operate in our diversified litigation portfolio. And there was a large multi-billion-dollar settlement. You can Google it right now. It's very exciting for the harmed individuals, and it's exciting for our investors, right? Because our investors get to participate in some of the contingency fee that the attorney then gets back.
Okay,
And
that's not part of the legal part of it. So that
Mhm.
kind of makes sense. You get people who maybe want to do like a class action lawsuit or something, but they don't have the money to pay the attorney, and the attorney says, "Well, I'm willing to do it maybe on contingency, but I need to have some upfront costs, etc." So that's one way people can invest in the legal process, so to speak, right?
Mhm. Yeah, and our diversified litigation portfolio carves out success stories such as that sexual assault. There's other ones like Camp Lejeune water contamination, where our
Yeah.
military, civilians, and their families were harmed for 17 years. And we've got a couple thousand of those now that we're supporting an attorney provide to get settlements for and make meaningful. We don't do class action because it's like $50, $70. We do something called mass tort, which usually gets 100,000, 400,000, real meaningful settlements to these harmed individuals. So, and in our diversified portfolio, we have thousands of different individual lawsuits. And so we can do this on a large scale that decreases risk for our investors and produces great returns.
Now, do the investors invest in an LLC that does this?
So we're a securities offering, a Reg D 506C, and you invest as a subscription into it and as a member of an LLC, and we issue your membership units, and then we raise capital, and we originate a bunch of investments in the legal industry, and then we see it out over the course of really about a 3 to 5 year term, around that range. And most of the returns come back in that second, third, or fourth year.
How long have you been doing this 506 Reg D fund?
Yeah, so I've been involved in Reg D 506Cs, I think, since 2016,
Okay.
across multiple different industries. I think I'm a partner in 18 Reg D 506C funds right now. My partner, David Gooseman, who originates the litigation finance, he started in litigation funding back in before actually 2008 and 9. Actually, he spent about $750 million and collected about $20 billion through just going for the benefit of the for the benefit of the American taxpayer through just going against the street during the subprime mortgage collapse. And so that was his entry into funding litigation, and it went well. And since then, he's been doing it for large private equity groups, institutions, and we're partnered up now, offering it to accredited investors at much smaller buy-ins, not 20 million, but 100,000. And it's going really well.
So what kind of returns have if someone invested 100,000 have they seen in that fund?
Well, so every legal fund is very different, right? And I just want to say that just like in real estate, there's a really speculative stuff where I lost it all in 2009 and 10 in oil and gas. You can be a wildcat, you can be an angel investor, seed funder, and venture capital. You can do all these things that cause you to lose it all, or you can be just really late in the game where there's real assets there. You can underwrite it, you can put a lien against something, and you can get more predictable proceeds. And we tend to be on that late stage. I'm kind of at this point not interested in rolling the dice. And so with ours, we're looking at north of 20% internal rate of returns, which is one of the benefits of the legal industry. The legal industry just turns out to be an inefficient market. It's kind of a novel market where there's attorneys not a lot of people are knocking on the door saying, hey, look, I'll help fund you. They can't bring in partners because they can't just find banks or venture people to come in and push them around and control the cases because they have to maintain control and that attorney-client privilege. So it takes boutique shops like ours to really be able to fund them, and they are happy to participate and giving away substantial upside.
Very neat idea. I've got to go to another break here pretty soon. I do want to make a quick mention here also for Navi Appliance, Navi appliance.com. They're very, very nice people. They do good jobs. How many times did you get like an oven or a stove going out? We've had that a couple of times, and they were just very responsive. They can be reached at 707-484-5766 or go to Navi appliance.com. And when we come back, we are going to have some closing comments, so don't touch that dial. The Best of Investing will be right back. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Patrick Grimes. Patrick, we didn't have any trivia question for this segment, but what's your feeling about real estate? Where are we right now? Because part of your investments include real estate.
Yeah, we not only do legal, we have both, as you talked about, we have a debt fund that originates, first position loans, but we hold that paper, we cash flow from that paper, and then we also buy commercial real estate. But it used to be that I was doing I was partnering up with others to buy apartment buildings and inject a bunch of capital and improve those buildings to try and create higher rents. But we saw a really tough time. We saw, that after COVID, we saw inflation kick up, interest rates skyrocket, and then separately insurance rates used to be able to underwrite 5% escalation, and it ended up being 20 and 30 in some markets, or doubling. And that was your second biggest expense to interest rates. So it's been really tough for us included. Most all business plans have been affected. But what does that mean?
That's if you can get the insurance. Some cases you can't even get it.
If you can get the insurance, yeah. And so what does that mean? I mean, it means that, just like how residential real estate went through a downturn in 2009 and 10, commercial real estate just got hit 10, 15, 20, 30% across the country. And what is that? Actually, that means it could be a really good time to buy. Not all assets are created equal. We are staying away from office. I don't know how, and I'm seeing office continue to fall. I'm not seeing very many properties that can be converted, although there are some, and I think some of those can be favorable. But we're in, and I'm still not as favorable on multifamily apartments. They still aren't quite penciling in that engineering safety factor that I like to see. We've just seen some extraordinary things in the space, especially with the eviction moratorium, that industry is still recovering. But in our debt fund and our acquisitions fund, small balance commercial real estate, call it 600,000 to 6 million. These are industrial warehouse, industrial manufacturing, or shopping centers in some markets. We're seeing really solid returns where you can buy at an incredible price point, or you can lend at a really high interest rate because the banks are on the sidelines. They're kind of forgotten this area as they try and recover from the bond issues, and the operators that are owning it are just struggling from the delinquencies, the insurance, to all these, and their expiring debt. So it's one of those really unique times to just be able to buy right or lend right, and we set up two opportunistic funds to do that.
Do you like individual residential housing at all?
I stay away from residential. Residential really is a very impacted market. There's a ton of residential lenders. Operators they're knocking on your doors constantly as an operator. And I used to do residential, so I know what that's like. But what that means is it's so efficient that the pricing they priced it down so much that they're doing some weird things. And I used to be part of that, right? I lost it all one time. And then in residential, they're lending on like after repaired value or after completed value. That's
I mean,
imaginary
I agree with
value.
you.
That's not real value.
Yeah, I mean, some of these, I've seen some where it's like they'll give you, 95% of purchase and 100% of ARV. And all you're doing is giving the borrower a job, and if he doesn't like it, he just walks away. So, yeah, that's why I like what like the arrival fund. They keep the LTVs around 60%, maybe 70%, depends on the deal, and everybody needs a place to live, and not banks can't work fast enough, or they don't like cross collateral. So like you said, it's kind of a niche market on that. Patrick, give out your information one more time, because we're going to cut out with our thoughts of the day.
Check it out at Patrick at passiveinvestingmastery.com, or go to our website, passiveinvestingmastery.com. And if you'd like, we offer a free book. Just go to /book or click on book at the top. If you put the name of this podcast in there, we sign and ship out a hard copy of that book for free. We have 2 of them up there, Lessons from Thought Leaders or Persistence, Pivots, and Game Changers. Be happy to share my story with you and set up a call. If you're out there like, look, this guy makes some sense. Let's have a chat about what non-correlation, what alternatives are, and see if we can get you pointed in the right direction. I'd love to have that conversation.
Okay. Patrick, thank you so much for being our guest. Okay, thoughts for the day. Do twins ever realize that one of them is unplanned? Didn't know about that, okay? And 100 years ago, everyone had a horse and only the rich had a car. Today, everyone has a car and only the rich can have horses. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, your host. We'll see you next week.